Okay, so welcome to another video. Today we are looking at the Tuesday macro technicals report. So this is a report where I go out and look at across a multitude of different markets and see if there's any interesting patterns, or particularly if there's any interesting signals in some of the key or major asset classes. So on that note, the first one we're going to look at is US Treasuries. So we've got the 10-year yield there. So when you're thinking about yield, just a reminder, you have to look at it, when you're thinking about bonds itself is sort of upside down. But I think yield, it's still important to look at yield because yield can have a pretty big impact on a lot of other asset classes. So the pattern that we're looking at here today is a descending triangle. So this is what you would call a bit of a range trading pattern, and it sets pretty clear barriers or limits in terms of where you would see a breakout and what you do when you see that breakout. So in terms of setting the direction for Treasuries, if you get an upside breakout from this here pattern, then you tend to expect that it will continue to go in that direction. By the same token, you get a downside break and you expect it to go down. When you see the line in a triangle where you got a straight line and a sloping line, it's the sloping line that sets your bias, or what you might expect the breakout to occur. So for a descending triangle, you have a bearish bias, or in this case you expect it to go down. My target there would be if it breaks out to the bottom side, probably more towards 2%. So if we do get a downside break, that's probably where it would head to before you start to see support kicking in. Now, the other piece of context that I've added here is this Treasuries futures positioning chart. So you can see that there's clearly still very much stretched short positioning there. When you see a lot of shorts, remembering that yield is kind of like the upside down version of bonds. We see a lot of shorts, they unwind very quickly, then obviously yield's going to do one thing, and that's fall. So that's another piece of context to add to that, and in terms of where you would expect to see price potentially break out. But again, you wait for the break and you go with that. The second one, very quickly touch on, is crude oil. So we're seeing again same type of pattern, but in this case it's an ascending triangle, and so you tend to expect a bullish or an upside breakout for an ascending triangle, but again it can happen either way. What the other piece of context that I've added for oil is this chart of implied volatility. And for oil, you tend to see, when you see crude oil implied volatility fall or sort of come down to a lull, it tends to indicate a short-term top. And so that's kind of what we're seeing here. So that's one thing, an extra piece of information to add to the mix. And so it might actually bring you to expect a potential downside break for oil, which actually would be consistent with a downside break in Treasuries as well, because there's a lot of co-movement between these two asset classes. They're linked at the hip through the inflation channel. So higher oil prices, higher inflation, higher bond yields is the rule of thumb. So by the same token, lower bond yields, lower oil price, you tend to see lower inflation driving that relationship. So these are two very much key macro variables at the moment. I think oil is going to be the one that's going to be driving the next big move in global markets, and so when you see this here pattern resolve, that one way or the other, that's probably going to be the big thing that's going to be driving the next big move, and shake us out of this sort of period of little calm, quiet, low volatility that we've been enjoying at the moment. So that's it for today, and if you have any requests or comments, just put them below in the comments, and go ahead and please subscribe to the channel.